Good afternoon and welcome to CanadianAgMarkets.com. My name is Brian Como from Ireland Como Lafoy. We're going to share with you some information on wheat today. We haven't done that in a little while. Our last couple of videos have been focused on canola. Today we'd like to talk about wheat. So we're going to talk a little bit about some wheat fundamentals, some wheat technicals, and kind of discuss why wheat futures may be falling at this time. So let's get into it. All right. First, I want to talk a little bit about U.S. winter wheat crop condition ratings. Now, the crop condition ratings fell week over week to from 48% down to 47%. Overall, this isn't a large drop, and this is still slightly above average for this time of year, but it still does. It still is relatively low, particularly compared to last year, where we saw significantly higher crop condition ratings. This is at risk of dropping below average if we continue to see this crop condition ratings fall. What's really interesting as well is when you look at kind of the heat map as to where conditions had changed. Just want to kind of highlight some areas here. Kansas, Nebraska, Colorado, all three of those states are relatively important hard red winter wheat growing states. They all saw some relatively large declines this week. Kansas alone here makes up 22% or so of the U.S. winter wheat crop. However, Washington State, which largely grows soft winter wheat, white and soft wheat, accounts for about 11% of the total grown in the U.S. They saw condition ratings improve by 4%. Oklahoma, also a big producer of hard red winter wheat, saw or accounts for about 5% of U.S. winter wheat total, saw improvement in crop condition ratings as well. So even though we see some big negative numbers here in HRW country, overall the winter wheat crop only fell by a percentage point or so. So the market is taking kind of all of these crop condition ratings at this point with a bit of a grain of salt. I did want to kind of point out here that the drought monitor showed a decrease in drought risk last week and overall in spring wheat areas as well. Kansas itself also saw improvement over the week. Let's just look here at winter wheat specifically. So last week we saw 37% of the winter wheat crop in some kind of drought condition. This week it was only 32. So we are seeing a bit less risk in some of these winter wheat growing areas, despite the fact that the conditions declined in the official USDA report. Here is winter wheat location or states located in drought. Here's Kansas. Here makes up, according to this map, 21. It's somewhere between 21 and 22%, depending on who you or which year and planting acres happen. But they make up a lot. We actually saw this decrease as well. Here's kind of the overall percentage. We saw the total amount of winter wheat located in drought just 2 weeks ago at 38%. Then it dropped to 37%, and this week 32%. So we are seeing some improvement in the winter wheat cropping area. Looking at spring wheat is interesting as well, as there are some concerns in some of the spring wheat growing areas of the United States. North Dakota has seen some dry conditions, and South Dakota has seen some dry conditions as well, is in need of moisture. Overall, the spring wheat areas have been experiencing an increase in acres affected by drought, but we are seeing that kind of move lower a little bit in some of the, in particularly North Dakota. So overall, the amount of spring wheat acres that are affected by drought is up about 4 percentage points since last week to 43% in total. I do want to touch a little bit here on durum wheat as well. It's kind of interesting. In the span of a week, Montana, which grows about 26% of the durum wheat grown in the U.S., moved from 4% in drought to 65% in drought. However, as I was mentioning, conditions in North Dakota have improved. NODAC produces about 55% of the durum crop, and it's also important to note that these states here, Arizona and California, produce durum wheat in the U.S. as well, but much of that is under irrigation. Although high heat still can affect crops under pivot, it still is a little bit better off overall because of the fact that it is put under irrigation. The big difference, this is called desert durum, the durum that's grown in Arizona, California. It's kind of the similar type of durum that's grown in Mexico. One thing to note here is that in the durum market, this desert durum experienced about 40% less planted acreage this season than last season. So durum production potential in those two states overall, even though they're under the pivots, are still under a little bit of still a bit of a concern as far as falling production goes. All right, let's look a little bit at futures here. After rallying strong on Friday of last week, as the US dollar was kind of falling aggressively, futures have kind of backed off in the first couple of days this week. This is the benchmark wheat market, Chicago. It's still trading inside the range that we're calling, this March 17th to March 28th range. It's slightly above the 20-day moving average, although it did close below the 20-day moving average today, but spent most of the day above that level. It's still declining. So there is still some risk here. As you can see, a lot of these momentum indicators like the moving averages here are moving downward still. So overall, this is still a downtrending market. What'll be interesting here is to watch. We kind of have seen now this lower high, and so that sets up the potential if it comes down to test these previous lows to see if we make a new low. So kind of the definition of a bear market is lower highs and lower lows as the market kind of ratchets down. So we want to watch out for that as we near some of these March support levels. Here's the July hard red winter contract, Kansas City winter contract. Again, there's less of the strength was put into this market. Even Friday's rally failed to move above the 20-day moving average. It's had a lot of struggles moving above the 20-day moving average here. So again, we're kind of in this a very much tighter consolidation zone here, and does appear to want to leak lower. Of course, there is kind of a double bottom put in here from the early March and late March. So that would be some support in this market. You can kind of see it trails back over here as well. So at this point, we're kind of anticipating that support will hold, but if it doesn't, that could spell some weaker overall moves in the winter wheat contracts. Here is Minneapolis wheat. This is probably the one that has been experiencing some of the more positive market outlooks or market outcomes here. We saw a big rally last week culminating into some really strong futures on Friday. We were also able to get some execution done for our consulting clients on Friday, as there were some basis levels and things like that were advantageous. Elevators were coming out with some premiums and things like that, and we were able to get some good cash on the books. Just wanted to kind of point out a couple things on this chart. This 200-day moving average, although even though the market kind of pierced it here back in February, it has been trading relatively consistently below the 200-day. We kind of saw another close to test of the 200-day here and before a failure. So this market overall is not looking healthy either, although there is a bit of a channel here as well with kind of a triple or double bottom coming in near these lows as well. Just to kind of segue here before we get into some interesting fundamental information, I do want to talk about our Canadian grain market insights. You can subscribe to all our reports, which include, our target pricing and when we send out some of our ideas on when to price cash and those kinds of things. It is our most comprehensive place to get our information. You can subscribe to all our reports, all our daily commentaries, all our ad hoc market updates for only $99 a month, and that's less than $1,200 a year, which is an excellent value compared to other less comprehensive market letters that are in the marketplace. So again, $99 a month. You can cancel anytime. If you want to subscribe, go to canadianagmarkets.com/subscribe to subscribe. All right, let's get into some fundamental information here. Interestingly, stocks coming out of the 2024-25 crop are what I would call, far from burdensome. This is a chart of the top 10 wheat exporters and their projected ending stocks by the USDA. This list includes Russia, European Union, Australia, Canada, Ukraine, United States. I think the others in there are Argentina, Kazakhstan, India, Turkey. I think that makes up the top 10. So this is the smallest ending stocks by major exporters since, back in 2007 here. So these ending stocks in exportable countries are not burdensome by any stretch. So if we're just looking at 2024 fundamentals or 2024 with the crop year ending here at the end of May in 2025, it's not a loose situation as far as stocks goes. If we look at the entire globe's ending stocks, the last USDA 258.8 million tons. Again, it's been in a steady decline here for the fifth consecutive year with little or no ending stocks growth in wheat and declines in most of those years. So overall, globally, based on way back history, early 2000s, 258 million tons seems burdensome. It would have definitely felt burdensome as we grew this going into 2018, 2019. But now it's starting to back off, and the market has gotten used to 250 plus million tons of ending stocks. So this is starting to feel a little bit tight. Although you could argue my point there by looking at the futures markets and saying that it is pricing in, a healthy amount of wheat ending stocks. Wanted to look a little bit here at Canadian wheat basis so far for 2025. I will admit here that any public data on basis is skewed. The Canadian marketplace relies heavily on, hand-to-mouth basis specials in order to get farmers to act quickly when the grain companies want the grain. As a result, we continue to see basis specials or target price suggestions texted out to clients on the regular. However, this data can pull and does show, trends relatively well. As you might expect, basis has faded a little overall as the Canadian dollar and has climbed after Trump's tariff announcements began on the 2nd of April. However, last week we did see aggressive competition, and particularly in the Alberta Yellowhead corridor, which is where many of our full consulting customers operate. And we're able to combine the future strength on Friday with location basis specials to achieve some really great pricing levels. So as you can see here, even in the public data, we show a spike in basis levels in the northern Alberta or Yellowhead corridor region of Alberta. So, something we keep track of, and we do put out suggestions on when to take some action on these markets. Just kind of wanted to look forward a little bit. We also want to point out that production potential is not optimized for this year in the U.S. for spring wheat. The prospective plantings report released in March suggested only 10 million acres was to be planted this year, and with current drought conditions in North Dakota and now Minnesota, you'd be hard pressed to find anyone willing to put out a yield number above average on this crop at this time. Which means that it puts kind of a lid on the total production area. Bit of a different story in Canada. Spring wheat acreage. Spring wheat acres are expected to decline by 500,000 acres this year. Although some of those acres may shift, we are hearing some anecdotal information about, lower canola acres, potentially higher spring wheat acres. That's usually where that would go. Although we do still feel that this is directionally correct, we definitely feel that there's going to be an increase in spring wheat acres. We are a little bit conservatively biased here, or at least I think the StatsCan is a little bit conservatively biased. There aren't very many soil moisture concerns in Canada, so declines in the U.S. spring wheat may be nullified by Canadian spring wheat if things play out pretty well weather-wise. They may just kind of cancel each other out. But there still is some concerns, particularly in the U.S. with the spring wheat acres. I do think that U.S. futures tend to trade with a U.S. bias. What happens in the U.S. I think is important. What we do see as well in the seasonal index, just thought I'd update this for you. Here we are here at the second week of April. This is when we tend to see these wheat futures behave most advantageously, particularly ahead of harvest. We're kind of running out of time on this. It usually is a 4, 6, maybe 8 week window. This peak tends to come in sometime in May, mid-May, and then tends to decline steadily as we move through August. So, we did maybe get a bit of a shot in the arm on Friday, hence why we layered off some some sales into that market. We're still anticipating that there could be some strength in weather markets and such as we move through the growing season, but time is running out. We usually see the peak of this market in mid to late May. Sometimes that can stretch out, but just going by the data, that's what we're expecting here at this point. There isn't a whole lot of delay happening in the growing season or anything like that. So this chart may be accurate this year. It just may not produce the rally in the futures market that we are used to. All right. Thank you for joining us. Hopefully you have gotten something out of this video. Again, please subscribe at canadianagmarkets.com/subscribe to subscribe. And we will see you again later this week. Have a great day.